This video is on how to use the market regime indicator part of the ultimate trend following strategy. And if you haven't already, the first thing you should do is watch the video on how to use market regimes. It's a deep dive into it. You'll definitely want to have an understanding of how to use that first and how it works and what it means before using this as a trigger indicator. Just a real quick brief recap of it though. These settings on the market regimes, the system SQN stands for system quality number. This is a system developed by Dr. Van Tharp. It's a quantitative way of measuring market regime. And we have that theory programmed. We were inspired by the work, and it's inside of this trend following strategy. And these numbers that we have here, which are from Dr. Van Tharp, are going to quantify what type of markets we're in, whether we're in a very volatile bull market, a quiet bull market, a sideways or neutral market, a quiet bear market, or a volatile bear market. Here we have the settings of the SQN and market regime. So with that being said, again, watch the video if you haven't already. If you have, this is just a quick recap of it. Now, I have a SQN applied to my chart so you can see this visually, what's happening behind the scenes here. But in the actual, and I also have a whole MA so you can see it too. Now in the ultimate trend following strategy, all of this stuff is happening behind the scenes, this and this, so you don't see it visually on your chart, but I'm going to show it to you visually so you can get an understanding of it. So on the trigger indicator, when you go from whole moving average and you pass down the center rate of change in Connor's RSI and you go to the market regime cross and you have that selected, what's happening is it's using the whole moving average as your trend detector, but it's using the crosses of your market regime moving average as a filter to enter your trades. So let me explain that to you visually. So let's say, for example, we have a whole MA setting of 350. We're on an hour chart of Tesla. We have our market regime. We had it set back to a longer term period. We have it with 1,000 set back. So it's looking back 1,000 bars. So it's giving us a better analysis of a longer term trend. Is something really trending up or is it trending down, and what's happening right now? So you can see on the market regimes on the setting that Tesla, started a bull market back in 2019 before it really popped up, when it was still $60 or so. Might have even been, I think they did a 10-to-1 split, might have even been $420 at that time. But anyways, it started over here. You can see that we went from a bear market to a bear volatile to a bear market to a sideways to a bull quiet and then a bull volatile. Okay, and we have applied a moving average to this SQN, to this market regime, so we can see, hey, is our system quality number rising or is it decreasing? So we can see the crossover actually happened over here. This is when it started to rise. This is when the fast passed over the slow. So what we have for the settings in our ultimate trend following strategies, we have our whole MA to a 350 in this example. We have our market regime set to 1,000. That's what we're measuring back here. And we also have a moving average cross. And we have a 60 and 350. So to see that visually here, we have the SQN set to 1,000. We have the slow set to 350. This is a EMA. And we have a fast set to 60. And the fast in this example is our orange, the slows are yellow. So you can see over here, the fast crossed over the slow, and now this is a rising system quality number market regime. When it starts to go under, it's decreasing. So only when it goes above does this give us a condition to enter along on the whole MA. If this is not a rising SQN, we do not enter. If this crossover is not rising, we don't enter along. But since it was, we did enter along here. And same thing for the shorts. If it has to be decreasing for us to enter a short, otherwise we don't enter. So for example here, the only way we could have entered this green downtrend here is if this fast was crossing down beneath the slowing. You can see it did. So that fulfilled the condition. Over here, when it turned red, the SQN was still rising, so we did not enter this, and this avoided us a unprofitable trade. So that's just a small example of it. So again, the basic idea is we want to enter rising system quality numbers, market regimes for longs. We at least want to have that as a filter for our longs. And we only want to enter shorts when the SQN or the market regime number is decreasing on the downside. So that's how the market regime moving average works, the market regime cross. If you use that as the indicator, know that it works with the whole MA. You can always add a whole moving average to your chart to see it visually if you'd like to look at it. And know that it's working off this cross that you put down here. So you can actually grab an SQN from the indicators. There's a couple from, let's see, SQN. We have some from this gentleman and also from this great trader, Chris D. Macro. Also has an SQN that's really good also, that I favorited and used also. And that's how you can put that on your chart and see it visually too. And then you could add moving averages. This is just if you want to see it visually. So just know that that cross above allows you to enter longs with your whole MA. The cross below allows you to enter shorts on your whole MA. Otherwise, it will not take a short if this crossover hasn't crossed to the short side, and it won't take a long if it hasn't crossed over to the rising side. If you have any questions, just send us an email or go to our contact us page. And if you haven't watched the other videos, we'll go through the quick settings real quick on the rest of it. Here you set your start year and start dates. Pretty self-explanatory. You can have your start year. You can use any day in the future, any year in the future. So that way, as information comes in real time, it'll get populated on your chart and your strategy will enter and exit trades. You set your whole MA period length to whatever trend length you want to use. If you want to use smaller periods, you can. If you want to use longer periods, you can. So you'll just have to experiment with what's the right one for you. You won't use the center rate of change or Connor's RSI settings. These have no effect on the strategy for using the market regime cross. Just the whole MA period does. Your market regimes you can set over here. You can filter these out. You can actually change these settings if you want. If you watch the how to use market regimes video, you'll see how to do that and what settings you could possibly use to look for different conditions here. The moving average crosses a filter. We just went over how that works. And you have two market regimes. You can use one as a slow and one as a fast. And you could just change your settings, the look back periods here and here for that. You could enter after a certain amount of candles. So if you want to delay entry, you'll see here that I moved ever so slightly. Actually, I should probably zoom in more so you can see it better. So let's look at that again. We're going to go to our enter after candles. By default, as soon as your trend changes, let's say from a green to a red, we're starting to go down. After it turns red, the first closed candle will be your default entry for a long. Let's find a long real quick so you can see. There's a long. So as soon as after it turns red and turns green, your first closed candle in the green will be your long entry. That's default. With the enter after end candles, you can delay that entry. And what that's good for is for whipsaw periods. And here's a good example. Here, you really don't have a short period starting, but you can see here for a couple candles, it thinks it may have an uptrend starting to start, and then it changes again to a downtrend short period, but it really didn't turn into that. So you can actually delay your entry by a certain amount of candles. And for little periods like that, you can actually get rid of those whipsaw periods. You can actually see down here, it greatly enhanced the profitability and the percent profitability and the profit factor of the strategy by doing that. So you can really eliminate some whipsaws by doing that. So you can just test different settings and see what works with what you're trading. We also have here a re-enter after trade. Excuse me. Here we have a re-enter after trade. And what that's for is if you are in a trade, so we have this long entry. Let's say we get stopped out or we have a take profit over here, but we're still in a long. Actually, let me make this a little longer to make it easier to see. Let me change this to maybe like a 600. And let me go even longer, actually. Let's go to 1,000. I get rid of that little red period. Okay, so now we have this whole uptrend that we're on. I'm also going to change my whole MA to 1,000 to match that. Okay, so we entered along here, and say we get stopped out right here because price went down, but this trend is still green. With the re-enter trade, we can re-enter the trade. So let's see that visually. So let's say we do get stopped out. Make our stop loss a little wider so you can see it really easily and visually. Okay, so we entered the long here, we got stopped out, but the green trend is still in effect. So we actually re-entered right here, and we're just trend following now. And our trend changed over here, so we exited the trade over here. But that's how re-enter trade works. And you can actually delay candle entries on that also by any amount of candles you want. You can see that that can make you more profitable too in certain whipsaw periods. If you want to do directional trades long only, you can do that. If you want to do short only, you can do that. If you want to do both, you can do that. Stop loss should be pretty self-explanatory. To use stop losses, you must click Use Stop Loss. If you want to see it visually in your chart, click Show Stop Level. And you can see this blue line now is adding the stop loss on the chart. So our entry was here, 15% underneath was our stop loss. So there's our blue line showing our stop. Let me go down to that. You want to also adjust it to the hundredths percent. You are able to do that. With the previous high-low, you can go to the candle before and use that. It's usually better on higher time frames like daily charts or maybe weekly or monthly charts. But you use the previous candle as instead of your direct entry, where to place your stop loss from, or you can use your previous trend. And to see that visually, you'll see this example. We'll bring our stop loss actually down to 0 with the previous trend. Okay, so what this is doing is we have a green trend here we entered, and our stop loss is looking at what was the lowest point of this red downtrend. Okay, it was here. So let's place our stop loss there, because if we're going to be going on an uptrend, we're probably not going to go down further than the lowest point of the last trend. So we can use that as a stop loss for that, if you like using that. So you can experiment with that and see what you like. You can also use Connor's RSI as a stop loss. If you want to look at information about that, you can look at YouTube videos or go to Investopedia to read about Connor's RSI, but it's a really nice adaptive stop loss system, and you can actually use it at the same time as your fixed percent stop loss, and whatever trigger happens first, you'll get stopped out on. If you want to use ticks or pips for futures or forex instead of percent, you can do that with your stop loss. If you want to use average true range instead of your fixed percent for the stop loss, you can do that also. So we would actually, it's one or the other. You can't use a fixed percent and an average true range. You choose one or the other. You can have Connor's RSI with it, but you can't do a fixed and an average true range. It's one or the other. If you want to move your stop loss to break even as soon as your trade gets in profit, you can do that by clicking move stop to break even. You'll want to definitely test that out, see how that works for you. Sometimes it works great, sometimes it doesn't. Depends on what you're trading and what time frame. If you want to use a trailing stop, you can do that. You can see here I have a 15% trail stop applied, and price, with just the stop loss only with the trailing stop, we start to trail price. And you can put any percent in there you want. You can use ticks or pips also if you're trading in the markets. If you don't want to use a fixed percent and you want to use an average true range trailing stop, you can do that also. You probably need to use a higher setting on an hour chart. There we go, maybe something like that, maybe even larger. So you'll have to test different settings and see what works for what you're trading, but you can use one or the other of the trailing stops. You either use a fixed stop or you use an average true range. So with stop losses, what you're going to do is you're going to first probably want to show it on the chart. Then you choose, do you want to use a fixed stop loss or do you want to use an average true range stop loss? You choose one of those. Or you could use Connor's RSI by itself if you like. Or you choose one of the fixed or the average true range and Connor's RSI, or you have them by themselves. So just never the average true range and the stop loss fixed by itself. I'm sorry, never these two together. They kind of cancel each other out. Then you could choose move stop to break even if you want to have that also. So let's just go through this. We're going to have a stop loss. We're going to have use Connor's RSI also. We're going to have move stop to break even. And instead of a regular trailing stop, I want to use an average true range trailing stop. And now they're all working together. So that's how stop losses can be utilized. If you want to have a take profit, you can also have that. A couple of different ways we have on here. You can use Bollinger Bands or Keltner channels is one of the options. And let's make this a little larger, you can see it on the screen here. And let me zoom in too so we can see things a little easier. Okay. So here we entered a long, and based on our profit setting, we're using the Keltner channel right now. As soon as price touched outside the Keltner channel, we took profit on that. If we want to use Bollinger Bands, we can do that instead. So we can see, let's see where we entered a long. Okay, we entered a long here. And we actually never exited the Bollinger Band on the long side, so we got exited out here on the next trend. Let's find a long where we got exited out. Okay, here's an example. We had a long here. We exited the Bollinger Band there. We exited the trade. So those are two ways of using take profit. If you want to use those, you have to have use take profit selected. If you want to show it on the screen so you can see it visually, you have show take profit indicator. And then you would have a use take profit indicator, whichever one you want to use, here, Keltner channel or Bollinger Band. We also have a use percentage from entry if you want to just maybe exit at a set amount, let's say maybe 10% for example. So let's see that visually on the chart now. So we have use take profit, and then if we want to use percentage from entry, there we go. So we entered here, and so we got 10% in profit. We exited the trade over here. That's how the fixed use percentage from entry works. You can also use ticks or pips too, depending on what you trade. And you can just as 100%, and you can make it any setting you want. You can also use it in addition with the Keltner channel and Bollinger Band, and whatever condition happens first, whether it's your percentage from entry gets hit or you exit outside a Keltner Bollinger Band channel, it'll exit based on those. And the last thing you can do is the last two things you can do is you can use average true range to take profit instead of percentage from entry, or you can use the Connors RSI take profit also. And you can use these by themselves, or you can use them in combination with each other. And whatever happens first is what you'll be exited on. So you can use them, a lot of experimentation to use them by themselves or with each other to see which ones give you the best results. Now we have long and short entry filters. We have two long entry filters. We have two short entry filters. And the way these work is you would, let's say you want to use long entry filter, you have to click on use long entry filter. And if you want to use RSI, let's say you only want to enter trades that are above RSI length of 2 with a value of 20, then you would use this as a filter for that. Same thing with your stochastics. You can use above or below on each. Or if you want to use only enter trades that are above or below a certain EMA, you can do that also. Same thing for your shorts, and you also have two filters each, so you can use one as maybe a smaller time frame, and you could use one with larger settings for a higher time frame. Same exact thing for shorts, to filter out your shorts. And then you have long and short exit filters, and those are if you want to, let's say you're in a long, for example, you use long exit filter, and you don't want to exit if you're long, it's an RSI value of 95, let's say you just want to stay in the trade for some reason. maybe you feel good about it, or maybe it looks like the trend is still going to go. You can have long exit filters based on your RSI, stochastics, or EMA. You can use them by themselves or with each other. And the same thing for the short. So that's how the market regime indicator works within the ultimate trend following strategy. We also have videos on all the other ones. If you have any questions, just hit our contact us page and send us a message. We'll be glad to help. Thank you.